Okay, folks, welcome back. This is our midweek review for the SAT Mentorship, July 8th, 2020. All right, so before we get into it, there's a couple things I have to cover. There's certain simple housekeeping things. That way we are all aware what's expected of each other, and I have some good news as well. And I just can't even wait. I am so happy. Let me just tell you, I'm so happy. Okay, and I know it's suspenseful now. I know I got your ears all perked up, right? But just give me a second. Let's go over to the form real quick and let me get this bit of business out of the way. All right, for folks that have just started and they're in month 1, it's very, very important that when you click on your month 1 tab in the forum, usually you click on this and it takes you to your lessons. For month 2, you need to click on that, and this is your payment note. All of this right here. This is what has to be included. All right? And it's being sent to this link there. So a lot of you are sending your own version of what you think you should say in the note, and it's having to be refunded because it has to say this. All right? You have until tomorrow, because on the 10th, when we start business, anyone that has not paid their payment, not just on month 2, but anyone that hasn't paid for the continuation, we will remove access. If your access is removed because you are late, it doesn't mean you're kicked out. It just means that we have interrupted your service. We do not do any payments again or process any payments until the 27th. So our billing cycle is the 27th to the 9th of each month. So it's a large grace period there, but we will not be doing any payments. Like if you make your payment on the 10th, say, oops, I forgot, can I get back in? No, you're going to get back in on the 27th when we process payments again. Okay? There's a large group of you already that have already paid early. They won't be processed either until the 27th. All right, so that's the way we do things here. Just as a reminder, tomorrow is your last day to get up to speed with this rotation. And if you do not make your payment by the 9th, and you don't make a payment by the 1st here, then that's what cancels you. All right, and that's for every month, not just the month 1 moving into month 2. All right. Every single month, when you progress through the mentorship, there's always your tab that has the lessons, and then there's the subsequent month after the one you're at, where it has mentorship instructions. And it gives you the payment note that has to be included every single time you make the payment. It will not change all that much in terms of what it says until you go to Charter Membership. And Charter Membership has its own individual payment note. All right. So that's the business there. Appreciate you listening and having your patience. I know some of you don't like to listen to that because you're Charter members, but it is what it is. It's easier for me to get this way and visually show everyone and not create additional videos. So it is done now. All right, before we get into it, I just want to let everyone know that I have nailed 9 members, one of which was seeding a large group of IML people. I have banned them, and they are not watching this video. They are removed. And the other ones are small little, like sharing here and sharing there. Listen. I will spend money to get you. All right? I have spent money on people working with me in private. I make a specific video. It goes to them only. There's no way you're going to beat that because there's no other way. 7 other people had that same copy from different countries. Okay, so the bottom line is these people were caught red-handed, and a couple of them are in the United States. And I've pushed their information to the IRS for tax evasion because they went through PayPal with the same PayPal email address that they used with the mentorship. Brilliant. They're on record with them collecting $50 a month through send friends and family money abroad by sending it through friends and family because they're trying to get around the income tax of it. So they are in for a real treat. Not only am I going after them personally, but now the IRS is going to be interested in see what they're going to be doing with that money because some of them have actually had a pretty good sized group. But it is what it is. I have a few people else, some others in here, and you know who you are. I'm going to get you too. But it just takes a little bit of time. I'm working with a couple people now that are collecting the information. And one person, a lady, she was actually remaking the video. Okay? And you don't know what I'm saying in these videos. Like, I specifically go in and I'll add a little annotation about something. I'll say something about a particular level, or I'll comment about something, and you have no idea if that video that you're watching has that same little subtle nuance. Now, it's not changing any bit of the analysis. I'm not saying it's a long in one video and a short in another. But there's small little differences in what I say. And when these people make these remakes of my video, and they're saying the exact same thing verbatim, even though it's on their chart, that's how I was able to get them. And some of you are saying, well, don't tell everybody how you're doing it. No. I love this, because you are not going to beat me forever. You might make your little bit of money here, you might have your little group over here, but they're gone now, and there is no more enrollments. You're outside now. Well, they can't hear it, but the ones still in here, I'm telling you, I will get you, and I am going to take you to court, and I'm going to push every bit of it. I got money and time. You don't have all that time. I got lawyers at $650 an hour. Write-offs for days. Listen, you can't afford to be messing with this stuff with me, okay? And the bottom line is this. If you do the work here, you don't need to do all that Mickey Mouse stuff. Because honestly, I do not relent. Once I know who you are, I am on you. And I don't have to go to your country. I don't have to go to your city and state. I have lawyers that do that. They represent me and my company. It's the reason why I incorporated. So, it's happy days. And I got more to get. But I'm just telling you, some of these people out here waiting for this video to drop, it ain't coming. It ain't coming. And let's see how much customer service they have. Alright, so moving on to the dollar index. This is our daily chart, and I can tell you I'm going to be smiling the entire time through this video. You can probably hear it in my voice. But we have finally seen a little bit of a movement that, to me, at least indicates that it wants to go outside of the consolidation we've been inside of. Alright, so we didn't quite get below this low here yet. That's the level, the next level rather, that it should breach. Now, when it trades through that, it should do it energetically. Okay, so in other words, it should be a large candle. It shouldn't just stick its toe in the water here and then go back in the range again. That we don't want to see that. But if we go through this candle's low and it expands to the large range, we're going to be targeting here. And once we get to this level here, again, same scenario. We want it to trade. It can have one candle come back and kind of like retest or retrade into this wick. Remember, consequent encouragement, because it's a gap. So in other words, if we go below here and trade back up to the middle of that, that would be enough of a retracement for me. I wouldn't want it to go much more beyond that. And then we would expect it to trade down to here. And that's what I'm thinking right now. It looks like it really has everything in the cards for it to do so. So that allows for foreign currency to rally higher. So let's drop down into an hourly chart for the dollar. Alright, so here is the business on the 1 hour chart for Dixie. We had a fair value gap in here. We traded up into that yesterday and broke down, came back up into another fair value gap here with a mean threshold, bearish order block right there. Hit that today, broke lower, came back up one more time, and you'll see this on the lower time frames, but these levels aren't going to be so clear as to what I'm showing you on this time frame. But relative equal lows, look at the signature here. You see that? Remember I was teaching you that the higher of the two lows, if the one on the right is slightly higher, that is a really nice setup for low resistance liquidity run. And look what happened. Ran right through it, tackled the lowest low, obviously, but the signature is having that slightly higher low right there. Market came back up and tested the bodies of the candles again in here. Didn't get back up to the discount end of that daily busy. That's what these levels are again. Okay. Before we broke away, we actually traded to consequent encroachment between the premium end and the discount end of the daily busy. So again, we've been talking about this for a while. Go back and rewind the video, and you'll see what these levels are indicating. It hasn't changed. Nothing's been moved around. It's the same levels. It's been on the charts for weeks now. But we went to consequent encroachment and then expansion away, targeting the sell side liquidity. So we have a little bit of a smaller, well, not smaller, but a close short-term low right over here that still has yet to be swept. I suspect that'll be the next order of business, and then we'll see if we can get out of the 96s and trade into the 95s on dollar. Let's go into the 15-minute time frame. All right, just a little closer. There we are. So there's the hourly fair value gap. We showed up in here 1, 2, 3 times, then breaks lower. This low being broken here. Comfortable with seeing it as a market structure break. Fair value gap trades up into it. Another small little fair value gap as well. Even though we wick, don't look at that as all that meaningful. Now we go back up into what are bodies of the candle. So it's, again, a retrade to these levels inside the fair value gap. I'll move that away. You can see it. It's this candle's low and this candle's high. And I'll move it away so you can see. All right, so we trade up into that. Optimal trade entry there. Expansion. Breaks the discount end of the daily busy. Runs for the sell side liquidity, resting below these relative equal lows. And here's where we're at. So I want to see dollar remain heavy while it's below the discount end of that daily busy. Again, for clarity, you can see it's the lower end level here. So we don't want to see it go back up in here. Okay, if this dollar goes right back up in above 96.70, we're going to basically still stay in this range, and that's not what we want to see, because it just means we're going to be in really lethargic price action, and it's not going to be all that exciting. As long as we stay south of 96.69, we should stay heavy, and it should just keep grinding lower and trade into the 95s, and we'll see what we get. Let's move over to euro dollar. All right, so we're looking at the daily chart of the euro dollar, and I think that we're going to make an attempt to get above this short-term high here now. And how we trade at this high, it should be aggressive. It should go through that and then make an attempt to get above this high. Now, once we get, or let me say it this way, should we get to this high, there should be a lot of excitement above that and really reaching with big candles. Just like we're looking at big candles down here like this. If we get above this high here, I want to see that type of reaction and send this thing up into 116s, maybe even 117s quickly once it gets above this high. That's the price action I'm looking for. It should not be really slow and lethargic. They've kept it down here for a while, and I think we're about to send it higher. And if we do, it should be on energetic price move. It should be large candles on the daily chart, and it should be very clean price action. Lots of gaps, and we want to see those gaps remain open. That means it's going to be a clear indication that this market wants to go higher because it's been kept in consolidation for a while now. Okay, so let's drop down into a hourly chart. All right, so here is yesterday. We had a rundown into institutional order flow entry drill. That's the gap in here. We don't want it to completely fill in. We're not looking for a fill or a closure of a liquidity void, because that's not what this is. We want to see it trade down into just below that candle's low, or at that low. Institutional order flow entry drill. You can be a buyer there. Rejection block right there. Boom, hits it, rallies away. Rejection block. Boom, hits it, rallies away. So now we have, what's this over here? What are these two highs here? Anything particularly interesting about that? Relative equal highs. The high on the right is lower than the high on the left. This sets the stage for what? Month 1, low resistance liquidity run. Okay, so that's the signature you look for. I don't teach that in month 1. So when you're watching those lessons, and people have shared those lessons and got thrown out of the mentorship. They think they have everything, okay? And that's what's cute about them. They think they literally know everything. And I haven't really opened up the lessons. They're just foundational. I will amplify all these things as we go through, especially going through January 2021 to December 2021. But the signature you want to look for the low resistance liquidity run is the highs and the lows you're looking for a run. It has to have this signature. If it does, then you know it's an easy absolute. It's going to go there. How do you know if it's going to go above those highs, Michael, or not fail? I just taught you. If it has this, just like the dollar, just opposite. If it has this, it's an easy low resistance liquidity run for a run above the highs. But you target the higher high. But the signature is having the lower high on the right. Okay, you see that? So if we look at that in context, it would look like this. So here's the relative equal highs. So there's liquidity resting above these highs, but specifically target for that one right there. That taking off a large portion of profits at the rejection block, whatever the highest up close candle is, whether it be in this price swing high or in this price swing high. This price swing high being lower sets the stage for a low resistance liquidity run. Now take that algorithmic theory and principle and amplify it by saying, okay, if we have the lower high to the right than the one to the left, we do have the low resistance liquidity run signature there. But this high being higher than this one, we have to look at where the rejection block is in this candle. So either one of these can be a rejection block at which you take a scaling off and a potential partial profit. But some of the highs won't have this rejection block, which is the up close and this up close here, being so close to one another. So depending upon how much of a difference it is between this one and this one will determine how much you take off. For instance, if you want to take off, say you want to take 50% of the trade off, okay, and this one was a little bit higher than this and this one was a little bit lower, you could take off 25% at this one because it's lower and the easiest one to get to first, and then take another 25% off at the next rejection block. Then take another portion off here, and then let it go. Leave something on in case you get a runner. And we look like we have the potential to have a runner. So we're looking for, 1/16s. It could be in those prices, really soon. I'm not saying it's going to be there tomorrow. I'm just saying that that's what we're looking for. Okay, so what we've been waiting for, we wanted to see the dollar leave that daily SIBI. It's done so today, and everything looks as if it should pan out. Not guaranteed, not an absolute. I still could be wrong, but my money would be on this. Okay, so that's kind of like telling you where I'm looking. All right, so we're going to look at this consolidation on a smaller time frame, on a 15-minute time frame, and give you a little bit more detail there. All right, so we have a run below the rejection block, as I indicated on the other time frame. We have a fair value gap right in here, and a smaller one right in here. So you can see it reduces down into the 15-minute time frame. It's this candle's high being drug out. It's just not sitting on it for whatever reason. And then this candle's low. So this candle and this candle, the small little portion in the middle, that's your fair value gap. Didn't quite get down there and close it. I like that. I like the fact that it sprung away like that. And then it came back down. Rejection block. Down close. Inside of a swing. It runs through it and then rejects. Beautiful. Over here, what do you have? Relative equal highs. The high on the right, slightly lower. Beautiful. Low resistance. Runs through it. And then it gets to that higher time frame, hourly. Relative equal highs. And it clears that. Now, what do we have here? We have a BISI, buy sign and balance, sell sign and efficiency. Consequent encroachment. It trades down to that and breaks above. Now look what's going on here. See how it's just sitting sideways but just drifting lower, 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 lower. I'm looking at this right here. Okay, I think it's accumulating again, and we'll probably see it go higher. It should not go below this candle's low. Now you're already asking me, why do you pick that? Because this imbalance here, if it comes back down, it could come down and rebalance there. I don't want to see it trade down below this. because if it does so, we're really coming back down to the top of this trading range, and that to me is retail. Everything in this is indicating it wants to go higher. Why would they give the opportunity for retail traders to get in on resistance, broken turn, support? We want this to be left open, because that'll be what? A breakaway gap. Breakaway gap sets the stage for another advancement higher, and then we'll look for another gap in here that will hopefully stay open, and that'll be our measuring gap. Once we get that, then we can get really good ideas where how far it could potentially go up. That's where my focus is, okay? All right, so let's move over to cable real quick. All right, so here's British pound versus the U.S. dollar as our daily chart. Now this chart looks interesting in the sense that we could really make an energetic run. That means basically big candles, okay? And I picked up this way of saying that because I've been talking to my sons, and I'm trying to communicate a way where it makes sense so they can visualize what that type of price action would look like. So if I say it a lot, it's because I've been saying it a lot with them. So anyway, just large ranges, you guys are used to hearing that. Large range expansion that would take us above this high here. And we have a small little fair value gap. I've mentioned this in a month or so ago and touched on it a couple times throughout the span of back in here and present date. This one here, this fair value gap, that's not an end result or a terminus. That to me is just an objective. I like these relative equal highs. It's too clean, it's too perfect, and I think we could be from where we are right now up there in the coming weeks. All right, so that's what we're looking for in terms of swing trade ideas, okay, longer term horizon objectives. So anything that I can put on in here, I want to try to keep a little piece of that on and try to get up into the 132s, 132.20s, something like that. All right, let's drop down into the hourly chart. Man, this is such a good day. All right, so we have a consolidation in here, and the market leaves, okay, it leaves this range. See this range in here? This big square rectangle of price action. It breaks out of it, comes back down, leaves this open. Beautiful. We want to see that. We absolutely want to see that. It's trading off of a bullish breaker. We have a low, high, lower low, up close, candle, extend that out in time. There's your bullish breaker. And optimal trade entry and breakaway gap. Hello. Fair value gap, trades down, doesn't hit the bullish order block. Right, it doesn't need to. All we're looking for is a move below this candle here and expands up. I like this price structure here. I don't want it to go back below this candle over here. This, what is that, down close candle at a low of 125.69. We'll just call it 125.70. We really don't want to see it trade below 125.70. Now, can it go through it real quick on a news event and come back above it? I guess I don't want it to do that, but I want it to stay above it and just keep pressing higher. Everything in this price action indicates that it looks like it's going to be one of those, it just keeps going higher, it doesn't even try to retrace, it just keeps pushing higher and kills anyone that wants to sell short. That's what it looks like to me. I don't look at this as a run above this high and this is a turtle suit, because I have a lot of people saying, this is a short, this is a short. I don't want to stand in front of that. I don't want to do that. So we're going to be looking for signatures that would support this as a continuation on the upside, and we'll see what we get once we trade above 126.50. 126.50 should start to spread its wings and get really moving. Large ranges. And 15-minute time frame. Nothing doing there except for a small little fair value gap. I would have rather seen it come down and close this little piece of price action up. Maybe even come back and touch that. But it's left it open. So let's see if it does in fact keep this portion of price action open and not fill and start to advance higher. Because if it does, again, the key level is 126.50. We want to see it trade above that and then start showing really large ranges. Speed, that's what we're looking for. And I'll explain why I want that to happen should it occur when we get into our weekend review. I've already co-signed and said what side of the marketplace I want to be on, and I told you that that price level should trigger large ranges. Should it happen, I'll give you more details over the weekend. In other words, Sunday's market review. Saturday, just so you guys know, charter members will get the model number 6 trade plan. And I appreciate your patience waiting for that as well. So I'll get caught up with you guys there. And let's go take a look at the dollar CAD. Alright, so here's dollar CAD. This is their daily chart. As you know, I was trying to get short on dollar CAD the other day. I was testing the market to see if I can get some kind of a movement in my favor, and it came today. So while I did get stopped out, it gave me a little bit more insight as to what it might be reaching for and try to accomplish on the upside before going lower. And we have this low here. I like that. Now, near term, that's all I'm looking for. I'm not trying to get nuts about where this can drop. Dollar CAD in recent years have basically acted a little squirrely, where usually the dollar index analysis can lend very well to dollar CAD. We've had issues with crude oil, which is a big impact on Canadian dollar, and we've had issues with just it not wanting to behave in any real logical manner. I just think that shorting and looking for a low here to be taken out is a sober objective, not trying to be overzealous about my analysis. And we're going to see if we can get a continuation on the downside. Let's drop down into an hourly chart. Alright, so we have rejection block. Notice it did not get above the high. So once it trades above this close, you have a line on your chart, which I'm not going to do because it creates more clutter. We have relative equal highs in here. It raids it, doesn't quite get above here, but it does breach the rejection blocks, and I've been watching this in here. And when it broke this short-term low, we'll see it better on a 15-minute time frame, but when it broke, it came back up, and I wanted to see it one more time break this low, and it does, and then it comes back up and gives us another fair value gap. Right in there, there's your New York session entry. That's the setup. Relative equal lows. What's the signature there? The low on the right is higher than the one on the left. Low resistance liquidity run. Okay. Dropping to a 15-minute time frame. So we have this low here. All these candles in here are supported above this dealing range low. We run above, don't even make the old high, and then breaks down. That in itself is a break in market structure. Then we have the mean threshold of the last up close candle, trades right into it perfectly. Perfectly. Then what? We want to see it react again. Break lower. It breaks below the short-term low. So now we have two qualifying signatures there. We have the fact that we traded above the rejection block. It had an unwillingness to go above this high. Is that bullish or bearish? It's bearish. It can't even get above that high. Then watch and see, does it start to break down in market structure? It does. It takes this low out here, then we come back up, and it goes to the mean threshold of the bearish order block. Does it react there? Yes. Does it move quickly below another short-term low? It does. I'm going through algorithmic theory to you right now as I'm talking about this. Wait for the fair value gap. It forms right there on this candle. With this candle's high, this candle's low, right in here is your entry. Right there. Market trades up, fills it, goes a little bit above it. It doesn't make a difference because the overall market structure is in place. Then what? Expansion lower. Consolidation, breaks down again. Institutional order flow entry drill. You only need to get to this candle's high. It does it here, 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 boom. Doesn't fill that in. But that's a liquidity void. It's supposed to fill that. No, it isn't. No, it's not. We don't want it to see it do that. We don't want to see those things filled in because it provides narrative. It's right before it takes out these relative equal lows, and then it advances and goes aggressively lower. Now I want to show you, and this is what I'm doing. I'm actually going up in this portion of the trading view, right about in this vicinity here. You go up and click on Compare tab. It looks like a little circle with a plus symbol in it, and it says Compare. This is the field that opens up. And here you want to put DXY, and then click on that, and there you'll have your SMT. So what I was watching, in here the market was going higher for dollar CAD, but the dollar index was not reflecting all of this lipstick. Okay, all this was fattening of the pig right before the slaughter. And then we have This high represents this high in $CAD. This high represents this high in $CAD. We can see that there's an overall distribution that's going on inside of $CAD, because dollar index is simply saying I'm not going up there. It's just, I don't have the strength to get up there. So why is this going on? Because they're pushing anyone that's going short, namely like me. I was shorting it the other day and they knocked me out. I already knew I was right on my idea. I wasn't completely abandoning the idea. I just knew. That's why I didn't get back in $CAD that day, because I was like, okay, I know they're waiting for something. So I had to figure out what it was. And how they were trading above that rejection block is indicative. And we saw a break in market structure here. And in the clear, easy fair value gap, boom, breaks. Let me get this off here now. And just a real nice, easy, low resistance liquidity run for $CAD for a New York session setup. And that, my dear friends, is going to be it. I will touch base with you tomorrow in our temporary, again, don't fall in love with these daily uploads, but our temporary daily upload, that will be another way for me to cover some things in price action. Hopefully we'll get a nice large range event tomorrow in the markets. And if not, I'll certainly have something else to teach you. But until then, I wish you a pleasant evening, pleasant day, and good luck and good trading.